Yeah, the drivers for weak equity performance in China, as far as onshore equities are concerned, are deleveraging, which is linked to the entire effort by the policymakers to reduce leverage in the system, not just stock markets. Of course, trade concerns also add to the negative feeling, but valuations are becoming very attractive over there, and the profit growth of companies, industrial enterprises, is strong. I think about 17% YOY. So I guess at some point in time, when the sentimental aspects change, when they do find a breakthrough on trade with the US, you will see a recovery in sentiment, and markets could rally from there.
Where is that inflection point, Binay? And tactically, does patient capital stay invested in those longer-term themes related to the consumer in China and the new economy broadly? And the broader question is, can this correction that we are seeing in mainland Chinese equities be viewed as a buying opportunity?
Yeah, so for the long-term capital, which is not too concerned about short-term volatility, I would say that valuations look very decent. China's consumption story is real. The government wants the economy to move more towards consumption as compared to investment and exports. These themes are intact, clearly. In the near term, the breakthrough on exports on the trade deal with the US is hard to call. You have the midterm elections in November, and you're not really sure if the US is ratcheting up pressure because they want to go into the midterm elections having taken on the big bull, China, or they want to go there showing a deal with China having escalated the tensions. The jury is out on that, and depending upon what the real intention is of the administration, you could either see a deal just before the elections, or you could see the battle prolonged beyond the elections, and therefore timing is the big question mark.
Yeah, and very hard to call what the end game is in this escalating tariff conflict. Binay, give me a line on the Chinese currency, because it seems that tolerating a weaker currency almost seems to be unofficial policy in Beijing. But how far can they take the currency before they run into criticism from Washington or unwittingly create capital flight?
Yeah, so they had to depreciate the currency to provide some respite to exporters. Clearly, domestic financial conditions had tightened. The export outlook 6 months down the road had weakened given the tariff talks or the failure to get to a conclusion there. And so they had to do something. At the same time, they were cognizant of the fact that an 8% depreciation in 6 months was too fast, too rapid. So they had to kind of put a stop there and reduce the speculative elements that were building up. You just look at the forecast from almost all important strategies on the street. Almost all of them have moved to about 7 or weaker. And so they had to kind of do something over there. And you also have to look at the depreciation against the dollar in the light of moves by the dollar against other currencies. So if you look at YTD numbers today, the yuan is down about 5%, as opposed to like the dollar strengthening about 4.5% against most emerging market currencies and even developed market currencies. So that distance has been traveled. From here on, the stance should be to let the currency weaken a little bit, but not at a very rapid pace, because if they do that, as you said, they will attract attention from the US policymakers. And they don't want to do that because they clearly want to do a deal which allows them to kind of continue working and exporting to the US.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.